Welcome back to Invest with Peter. So today I'm going to be talking about what has happened this week. On Monday, market went down, Nasdaq went down up to like 3%, S&P went down 2% plus. Dow Jones, every other market went down. FTSE went down, DAX went down. Honestly, all the market went down. People were wondering, is the market going down now? Are we in the bear market now? Well, I'm going to be talking about that today. On Tuesday, Jerome Powell went to the Congress for his confirmation and all that stuff. So he says so many things that I will share today, and you're going to watch it as well. Just a little clip of it and what he actually meant, and by what he's saying by there's nothing like transitory anymore and all that stuff. So I'm going to be showing that today. And the reason why market went up, it was actually is in the thumbnail. You probably have seen that. So I'm going to be telling you what he said and analyzing that as well. And what the analyst is saying, what the suggestion, I'm going to be talking about that. Yesterday, CPI came out 7%. I've always been emphasizing that the CPI is higher than 6%. I've been saying it, inflation is higher than 6%. If you've been watching my video, if you've been following me, I've been emphasizing that inflation is higher than 6%, and most analysts actually, they see the same way I see this thing, because most of this, gas, people are buying fuel is gone up, home consumables are gone up, everything, Christmas, people were buying left and right. Price of frozen food had gone up already. So people were wondering that what's happening. Then they didn't realize that inflation is caught up with them. So inflation is higher than 6%. Believe it or not, I think it's probably more than 7%. But we live in a political environment. They probably, I'm not saying they're covering it, but I believe inflation is higher than 7%. But it came out at 7% yesterday. So, well, the PPI is going to be out today, which is Thursday. You probably see that, before you see my video. You probably have come out before you see this video. But I'm saying that all the direction of the market now is not looking good, but the market is green. Why is that? We're going to be talking about that as well today. But before then, please, if you've not subscribed to this channel, kindly do. Please like the video, put your comment down below. That helps me, that helps the channel to grow. And before you know it, channel is going to explode, because I give out valuable information. And if you want to be updated on what is going on in the market, just subscribe to this channel. You're going to be having it every week from me. So now, before we go on, we need to see what is actually pumping the market, because everything is not really going the way we want it, but the market is rising. Is the market pricing it in? We'll see that. But before then, let's watch what Jerome Powell said on Tuesday.
What have you really learned, and you would share with your fellow Board of Governors to get a grasp as much as you can on inflation? Because a lot of us have been on the committee a while, and we remembered what Dr. Volcker did with the Fed under his leadership. And it was draconian, but it worked. I hope we won't have to do that, but you've got to do whatever you have to do. Do you agree?
We have to achieve price stability, and I believe we will, and I'm confident we will. And again, it's not just a question of restraining demand, although that will be. Right now, we're stimulating demand with very highly accommodative policy. As we move through this year, we will, in all likelihood, we don't know the future, but if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising rates over the course of the year. At some point, perhaps later this year, we will start to allow the balance sheet to run off. And that's just the road to normalizing policy. That's what we're going to be doing. Of course, we're committed. But we also we do believe, and I think widely it is believed, that these supply blockages will be alleviated too, so that there will be more supply as well, more labor force. But people will be coming back into the labor force. We'll see more recovery, although it's been slow, from participation. And we'll see these global supply blockages coming down. We'll see some more cars, although that's going to take some time. And that will help as well, getting supply and demand back at the same level.
Senator Menendez.
Well, guys, you've heard that from Jerome Powell himself. So I think it's just because he can't just come up to the congressman and just start saying, random stuff. He was being careful with whatever he said, and it's been dovish, it's not been hawkish. He can't go there and be hawkish because he wants his confirmation to go there for the second time, innit? So he's been dovish, he's been careful, pronouncing every word carefully. And, that actually helped the market. That's the reason why market is pumping up. There's no other thing pumping the market apart from what he said, on Tuesday, right? So he's been careful. He said the Fed is going to do everything, to use every tools they've got in their, in their armory to support the economy. But if it comes to the level that the economy needs to be dropped, they're going to drop it. So the bond buying, the stimulus, everything is stopped already, but slowly, they're going to be coming up, withdrawing, with all the support they're giving to the economy to boost the economy. But he didn't want to drop the ball at this point. But he's talking about the, balance sheet running out. They want to run out the balance sheet at some point. If it comes to that, they're going to be running out the balance sheet. So that is the thing he said. And the market see that like, okay, this guy is not really ready to crash the market. He didn't want to repeat what happened in 2018 when market went down 7% before the second quarter, and last quarter market went down. The whole year market went down minus 20%. So he was being careful this time. He didn't want the repetition of what happened in 2018 to happen in 2022. So he's just been careful. Like, okay, we still need to do what we need to do. Labor is going up. The labor market is doing well at the moment and all that stuff. So he's saying this, but the CPI that came out on Wednesday yesterday is not really helping the situation. Still, market is rising. So, but there's another analyst that says, well, we need to be very careful where we're putting our money now, because there are, value tech stocks and, and growth tech stocks. The difference between that, what is as well.
Research, Chris, what say you?
Hey, Brian, great to see you. Happy New Year. Well, listen, I think this is a big moment. I mean, we've had this 8 or 9% correction in the Qs. Now we've had about a 4 or 5% rally over the last several days. And the question we're posing is this the same as all the other correction from the last 18 months where it was relatively short-lived and the market bounced back and you went on and made new highs? Or is this a little bit different? And right now, I think it's actually a little bit different, both internally and from a macro standpoint as well. So I brought along some charts. We'll first start with the internal complexion of the triple Qs. And this, I think, is the big difference. The prior corrections you've seen over the last year and a half, you always started them with 95% of stocks above the 200-day moving average in the triple Qs. We started this one with about 60% of stocks above the 200. And this rally the last couple of days really hasn't changed that at all. So the internal makeup of this market is still weaker than we've seen at any point over the last year and a half. When you look at where this can rally to, 390 is a big level. I would be a little careful here. I would be more prudent. I'd be taking some off the table as triple Qs rallied into that big level around 390 because the internal complexion of this market is just not as technically sound anymore. And then secondly, I think the macro environment is dictating this shift as well. The second chart we brought along, I think, is a good one. It's showing the rise in real rates versus value tech versus growth tech. And what we've seen in the past is that value tech tends to outperform the growthier tech names when real rates rise. And we're in the camp that real rates will continue to rise here. So I think within tech, if you're going to play here, you want to emphasize the more value-oriented names. And then on top of that, Brian, the dollar has rolled over here. It's our third chart. And weaker dollar has tended to bring along with it a more value interpretation as well. So I think there's two sides to this trade. If we're looking for names we can own that kind of have the value orientation, look at something like HPQ. It's a 10 multiple name. It's not expensive. It pays a 3% yield. It just broke out of like a 20-year base. I think any pullbacks in a stock like that can be bought. Conversely, something like NVIDIA, which is on the other end of the spectrum, growth tech, actually is not acting that great here. Has not made a new high in about 6 or 7 weeks. This rally's been pretty tepid. I think there's some risk there.
All right, guys. So like he said the, value tech stocks is probably better than growth tech stocks at the moment. And value tech stocks, right? Sorry, my pronunciation again. So it's going to do well during inflation period and all that. So we need to be very selective. I think we have to be very, very selective this year. The stock we pick and all the companies we're going to be buying, because you don't want to be buying random company this year. It's just a year you have to be picky about the companies you're going to be investing in, because most of the growth stock are already they're already in the bear market, because most of them are in minus 20, 12 calendar year months, the minus 20, some of them minus. Look at Look at Robinhood. Robinhood is down 80%. Look at Palente, minus 40%. Most of these companies, Jumai, minus 70%. So all these companies, you don't want to be investing in them for now, right? So he's talking about that the value tech stocks is probably going to do well. I don't know the company he meant by that, but I'm thinking probably Apple, Microsoft, and all that stuff. They are going to be, they're the paramount, bigger, bags company with big, bank balance and all that, or P ratio, lower P ratio as well. So these are the things he's trying to say. But I think the market is actually priced most of these catalysts in. That's why market is still going green at this point. And I believe, January 25 and 26 is going to probably tell us the way to go, because people are just coming up with their own view. It's going to do this, it's going to do that. Market is down, market is going to go down, minus 70, minus 80. It's going to be correcting 10%. We're all saying what we're going to say. We don't know what the Fed are going to do about this. They are trying all they could just to sustain the market. And the market can actually see that. That's why market is still green, because market is not supposed to be green with all this negative news coming in from left and right. So market is just like, okay, with the look of things, Fed is not ready to drop the ball yet, but we play by the rule. We play the game by the rules. So whatever happens, we go the direction, of the Fed. So I believe the earnings reports start coming in from, next week. The banks like JP Morgan, Goldman Sachs, Bank of America, they're going to be reporting next week. We're going to see how they do, and that probably going to reflect, what's going to happen, whether people are going to be putting money in there, or people are already putting money in banking just to, sustain themselves throughout the bear market that probably looming and all that stuff, because banking, they do better during inflation and all that stuff. So, but I still think we are probably going to have a correction at some point. But in my own view, I believe Powell is not ready to drop the ball. He's not ready to drop the whole thing. But he said in that meeting he had with the congressmen and women, he said, we have to be very careful what is going on. We are going to use every tool in our capacity to sustain the market, to sustain the economy. He didn't mention the market. He didn't mention the market because it has to be neutral. He can't be mentioning the market because they're not allowed to trade market. But he was referring to the economy. He said they're going to be doing everything to sustain the economy. Every other thing they need to do. The labor market is doing well. He said it in that video that they're going to do everything. But when it comes to a stage where they've used everything they've got and it's still not, still not going anywhere, that's when they're going to decide to let the balance sheet run out. So once the balance sheet run out, guess what? Market's going to come down. And when market come down, then market's going to, from there, fight for itself, and probably from there come up again. The economy is going to struggle down there. But we need to avoid recession, though. They never mentioned recession, because no country actually wanted recession, because recession brings everything down. Things become very expensive. Life become very unbearable for common people. But what I'm saying is that it's just being careful in that Congress and saying we have to, be careful what we say. We address this and that. I think what is happening is what happened in 2018 when the market went down during the Q2. Market was like, down 7%, and Q3 and all that stuff, market, went down 20% in 2018. And it was like, within him, I think that's what he's trying to do. He's trying to avoid the, repetition of what happened in 2018, in 2022. So it's just being careful. And market see that this guy is not really ready to crash the market. He's not ready to drop the ball yet. But so the market is playing the game along, play the rule, play the game with the rule and all that stuff. So that's the cat and mouse, issue that is going on within the market. And I believe, regardless of what happens, we're still going to make money in this market. All you just need to do, be very careful what you buy. Don't pile up companies, random company, because you just want to buy something. Be careful. Watch what is going on in the market, and pivot your turns where, the real investor making money are making their money. So you don't want to follow the crowd. You want to be separate and just see, where the smart ones are making their money. And everybody's going to, probably at some point make money. But if you are not careful, you're going to be, probably buying some random company that probably have an IP ratio just because the company has a bigger prospect in the future, but present situation is probably going to affect them a lot. So be very careful. Buy low P ratio companies, avoid all these IP ratio company and all that. So I believe market is going to correct at some point this year. We need to understand that regardless of what happens, market is going to correct at some point, whether it's 10%, 15%, I don't know yet, but there's going to be a correction. And that's why we need to start dollar cost averaging when you start seeing the market direction going down, and be careful of a falling knife, because you don't want to start buying or piling all your money at once just in a day, just because market went down in a day 5%, then you put everything in there. You don't want to dollar cost average all through the months, and the specific date that FOMC is going to be meeting, because whenever it comes out, they're going to be dropping some information. It will probably affect the market positively or negatively. If it's negative, then you pile in some money again. Wait for the other months again, because I think they're going to be meeting like a couple of months, like March, May, June, September, December. So all those dates have to be very carefully watched, and those are the buying opportunities for us, investors. So guys, if you've not subscribed to this channel, kindly do that. Help the channel as well. Put your comment down below, and remember, tomorrow's investors starts today. All right, guys, I'll see you on the next one. My name is Peter Ads. Bye.